Good evening, this is WION Wallet. I'm Sumit Chaturvedi. Let's go straight to our top headlines. Banks including HDFC, ICICI and Axis have resumed levy of 150 rupees per transaction for cash deposits and withdrawals. Ratan Tata's Jaguar has introduced its new model, Land Rover Velar, and bookings are open now for the customers. South Africa's MTN Group has swung to its first ever fiscal loss in 2016. And in our special segment, we will explain the business of share buyback today. Now straight to our top story, banks including HDFC, ICICI and Axis have resumed levy of 150 rupees per transaction for cash deposits and withdrawal. Well, the amount would be charged for cash deposits and withdrawals after the initial 4 free transactions a month. HDFC Bank said that the charges would apply to savings as well as salary accounts. It would also cap third-party cash transactions at 25,000 rupees per day, while cash handling charges would be withdrawn from today. Ratan Tata's Jaguar has introduced its new model Land Rover Velar and bookings are now open for the customers. Tata Motors' own Jaguar Land Rover has unveiled new model Velar at a grand ceremony today, while the Velar now open to orders from around the world, including India. In a boost to British manufacturing, Velar will be built at JLR's flagship Solihull plant in the West Midlands region of England. The Range Rover brand has been heralded as Britain's greatest luxury export since 1970s and includes the Range Rover Sport and Range Rover Evoque. For the first time in 2 decades, South Africa's MTN Group Limited has swung to its first ever fiscal year loss in 2016. The Johannesburg-based telecom giant, which is Africa's biggest telecom operator too, reported a loss of around $200 million during 2016. In 2008, Bharti Airtel and Reliance Communications had made unsuccessful attempts to acquire MTN. Well, to know more about this and to talk more about this, we are joined by our correspondent, Inga.
No.
Inga, can you explain to us what was the reason behind this first ever physical loss of MTN?
Good evening, Sumit. Well, the company says that the regulatory fine by the Nigerian government of $1 billion is what led to the problem and also the unfavorable currency swings. Now, the Nigerian government raised concerns to MTN in Nigeria over 5.2 million SIM cards that were active but not registered and were used by criminals and also the Islamic group Boko Haram. And the Nigerian authorities also believe that 2 SIM cards were used in the abduction of a former cabinet minister. Now, this also gave us a thought on what will Bharti Airtel do now. Will Bharti Airtel be still interested in partnership with MTN, given the fact that $1.5 billion in money is being lost throughout the year? And also, let's also think about the fact that this is a loss. This is the first time that MTN will lose money in over 20 years.
Well, thanks so much, Inga, for talking to us and keeping us updated with the news latest on this telecom story. Moving on, demonetization or note ban will be credit positive for India as it is likely to reduce tax avoidance and corruption. Moody's Investor Service has said that. Well, besides, it said the countries remain resilient to economic disruption and the worst of the liquidity crunch has passed, which should support a rebound in consumption and investment. The US-based agency, however, projected growth to slow to 6.4% in January-March quarter from 7% in the previous 3 months. The agency said that if Most of the old notes are deposited into the banking system, legitimizing previously undeclared incomes and wealth. The benefits to the government linked to higher future tax collection will accrue from measures aimed at leveraging the information obtained when notes were deposited. Moody's also said they expect asset quality to worsen in the current quarter, but Indian banks have sufficient buffers to withstand the impact. The price for non-subsidized price of LPG cylinders have been increased by Rs 86 effective from last night. This is the steepest hike so far in history. Though this is in line with surge in LPG prices across the globe, the government said there will be no impact on consumers receiving subsidized refills. The government said the net price for consumer will be Rs 434, which remains unchanged. Thus, there will be no net impact of increase in price of non-subsidized cylinder on LPG consumers receiving subsidized refills. Now, banks including HDFC, ICICI and Axis have resumed charges of Rs 150 per transaction, while the amount would be charged for cash deposits and withdrawals after the initial 4 free transactions a month. In a circular released by HDFC, the leading private sector player said the charges would apply to savings as well as salaried accounts. The banks would also cap the third-party cash transactions at Rs 25,000 per day, while cash handling charges would be withdrawn effective last night. Moving to London, where in London, homeowners are desperately slashing the prices of their properties. Sellers are providing huge discounts on their properties. More London home sellers are having to cut the asking price of their homes, and they are offering deep discounts as political uncertainty and high values dampen demand. Price cuts seen in prime central London in the immediate aftermath of Brexit are now filtering through the outer boroughs. Affordability issues are now a problem after a decade of house price growth. London home prices have surged about 86% since 2009, meaning it now costs buyers 14.2 times their annual gross salary to purchase a property there. Staying with the global news, where Snap Inc., owner of popular messaging app Snapchat, has raised $3.4 billion in its initial public offering, or IPO, more than it had sought in the most eagerly awaited technology IPO since Chinese e-commerce giant Alibaba went public in 2014. While the successful IPO pricing clears a major hurdle for Snap, which will go public without having yet turned a profit. The company's losses widened last year, and it is experiencing decelerating user growth in the face of intense competition from larger rivals such as Facebook. Despite the challenges in converting cool into cash, Snap clinched a valuation of $24 billion, the richest valuation in a US tech IPO since Facebook launched IPO in 2012. Now back to India, where according to a report released by a real estate firm, Mumbai has ranked 21st in City Wealth Index. The agency tracked the super-rich population in 125 cities across 89 countries. While Mumbai has been placed ahead of Toronto, Washington DC and Moscow, New Delhi is placed at 35th rank ahead of Bangkok and Seattle. The report stated that the number of ultra-high net worth individuals, or HNIs, in India increased by 290% during the last decade, with Mumbai having the largest super-rich population. India houses 2% of the world's millionaires and 5% of world's millionaires. This is time for a break at WION Wallet. After the break, we will go for coverage of markets of India, and also we will bring to you special on buybacks in the market. Stay tuned to WION. Welcome back to WION Wallet after the break. Now let's go straight to our markets coverage, where the market failed to hold 52-week high today, touched in early trade as Nifty closed below 8,900 on profit booking. The 30-share BSE Sensex was down 144 points at 28,839 and 50 share. Nifty fell 46 points to 8,899. About 2 shares declined for every share rising on BSE. To talk more on market, let's talk to our market expert, Lavlesh Sharma from Indore. Good evening, Mr. Sharma. First of all, we would like to know from your side, what sense do you make out of the market, which is showing such volatile positions now?
Where retail traders or traders basically feel volatility. Why? Because we are at 52 weeks. Certainly at 52 weeks we do see some kind of a profit booking on the higher side. This is the first time when we have also seen that kind of a erosion on the higher side, basically in the broader indices. Nifty has shed somewhat more than 1%, and certainly not sustaining 8900 mark is giving an indication that at all-time highs there is a profit booking, and somewhere bears are very aggressive.
Mr. Sharma, what should an investor do in these positions? What experts are telling investors that the mutual funds are the best way to stay put in the market or earn money at this moment, because markets are very volatile. An investor cannot easily come and go out of it. What's your suggestion? Should investors invest through mutual funds in the market? What is your suggestion there?
Okay, since we talk about mutual funds, there can be two types of investors. One who is basically very known to the market, who knows the technical and the fundamental factors of the market. If you want to direct invest directly into the market, you must have that kind of a knowledge. Until unless you're a passive investor, you don't have that much information about the market. You're not tactical and dynamic at times. One should certainly go for a mutual fund or SIPs. That is one of the best way. And since there has been some policy changes related to PFRDA and long-term investing in the mutual fund, some open of cap basically investing into the mutual fund has also opened up. So this has certainly given mutual fund a kind of a relief in the long term, and is certainly going to see a lot of money coming into the market. As far as what should people or clients do at this point of time when market is at all-time high, I believe it will be very prudent to book some kind of a profit. If you're already into the market, if you already have that kind of positions at lower levels, you should book profit, because at this present level I would certainly recommend to have any new positions being initiated, because these are the levels when we have seen almost a 30% stretch in the valuations. Market has also already rallied more than 1,000 points, and we are at all-time highs. All these being after the demonetization, with current GDP data coming in, and various economic events like Trump's being elected as a president. So this particular rally has seen a lot of volatility, a lot of event, and every event has been observed very smoothly. So certainly at this point of booking profit should be the strategy, and one should not initiate any fresh recommendations, any fresh positions.
And Mr. Sharma, will you just share your thoughts with us on global markets as to how are they doing and what is the strategy they are going forward?
Global markets have been doing well. Since last 3 months, we have heard a lot of things about Trump being elected, and there will be a negativity, but people have taken it positively. Most of the global markets are at their all-time highs, and for past 1 week we have seen global markets reaching their all-time highs and sustaining. If you look at the Dow Jones, 21,000 mark is now the benchmark, and certainly we are seeing new highs being made. So, of course, this is a kind of a rally where you have already seen a 20-25% move. So certainly at all-time highs you do see some kind of a correction. These minor corrections are actually another entry point into the market. So it is giving entry points on any corrections. But yes, if you talk specifically about global markets, they are on a very aggressive bull run in FY 2017.
Please stay with us, Mr. Sharma, as we move on to our special segment today. Today we'll be decoding business of buyback of shares. Well, share buyback is the flavor of the season in share market nowadays. A majority of big IT companies are looking forward to indulge in share buyback going forward. WION team finds out through this story the reason behind the season of share buyback.
Share buyback has become the buzzword after recent announcements of its major Cognizant and TCS to buy back shares. Following the footsteps of these IT giants, a number of Indian listed firms are going for the share buyback. The primary objective of a share buyback program is to arrest the fall in the value of a stock by reducing the supply of the stock, which essentially pushes up the share price through a better PE multiple. Share buyback is a more tax-efficient way of distributing earnings of the company. While dividends under 10 lakh rupees are not taxable in the hands of shareholders, companies have to pay tax on dividends. With a reduction in the number of shares in the market, the earnings per share increase. And because the company sends cash to buy its stocks, the cash assets on its balance sheets reduce. A company can buy back through either a tender offer or through the open market. In a tender offer, the company makes an offer to buy a certain number of shares at a specific price directly from shareholders. In the open market option, the company buys back to a certain number of shares. A maximum price is fixed, and the buyback can be done up to or below that particular price and not beyond. It can be interpreted that the intention behind a buyback through open market option is to buy as many shares as possible at as low a price as possible, thus trying to increase remaining shareholders' value to the maximum. In case of a fixed price buyback, the intention is to give a reasonable price to selling shareholders, along with creating longer-term value for remaining shareholders. Bureau Report, WION.
Now to another news linked to share buyback. Largest software exporter of India, TCS, said its promoters intend to participate in its proposed 16,000 crore rupees buyback offer. Last month, country's largest software exporter, TCS, had announced a 16,000 crore rupees share buyback offer, the biggest in the Indian capital market so far. In terms of the SEBI buyback regulations under tender offer route, the promoters have the option to participate in the buyback. The public announcement setting out the process, timelines and other requisite details will be released in due course in accordance with the SEBI buyback regulations. TCS has said that. TCS said its board had approved buyback of up to 5.6 crore shares or 2.85% of its share capital at Rs 8,250 apiece. The share buyback, if successful, will be India's biggest, surpassing Reliance Industries' 2012 share repurchase of Rs 10,400 crore rupees. Now to discuss what is share buyback and how it benefits company and what should investors do, today we are joined again by our guest Lavlesh Sharma. Well, Mr. Sharma, first of all, explain to our viewers what is share buyback and how does it benefit companies? Why do companies go for it?
Yes, there are multiple things related to share buyback. Of course, it has been clearly said. When there is a share buyback, it's basically use of cash which is there in the balance sheet. A share buyback can be in two conditions. One, when there is an aggressive, there has to be push into the PE multiple, and basically, the supply has to be restrained, and at times it has been also used when company is expecting a good net profit in the coming quarters or maybe financial year. So certainly it is used by organizations to basically use and utilize the cash that is in the balance sheet. Now when we talk about share buyback, it is also improves the PE multiple of the shares. It actually gives a kind of a confidence to investors that the investment they have held, you can take an example of TCS or Maharashtra Seamless or Pennar Industries, which has done in 2014, these companies. So it gives a kind of a confidence to the clients and participants, equity holders as well, that yes, there has been a growth trajectory with companies expecting to follow, and share buyback is part of that particular process.
And Mr. Sharma, when companies are going for it, what should investors do? Should they offer their own shares in that buyback program, or should they keep their shares to themselves? What should our investors do in that case?
Well, investors should basically hold, particularly if you look at the TCS, of course, anyone who is going to take a fresh position in the TCS will certainly have a 15% tax responsibility in short-term capital gains. But people who have held their shares for a longer period of time, last 1 year, they will be exempted. So certainly at this point of time, and whenever there is a share buyback, Certainly, investors shouldn't, submit their shares, and they should be part of it, because it gives a kind of a dividend payout, or dividend at the end of the financial year, as a kind of a few benefits. If you look at the Pennar Industries, this particular stock, I'll take an example. This particular stock had share buyback back in 2013 to 2014. It was at that time almost for a year. This particular stock from almost 30-35 levels has gone up to 42. It is coming at, and it has somewhat all-time highs of around 45-46. So certainly it also gives an opportunity of that 20 to 30% kind of a return, which we have seen in the past during process of share buyback.
And Mr. Sharma, why suddenly a rush to go for share buyback, especially in the IT segment? Why after TCS, now Infosys is planning, Wipro is planning, Cognizant went for it earlier? Why is there so much rush only in IT sector for share buyback?
Of course, very rightly asked. At this point of time, wherein there is so much change in the technological landscape globally, we have seen a kind of global events in last 1 year. You start with Greece, Brexit, then we have had Brexit, and then right now we have a kind of a potential Frexit in France, and this certainly has given a kind of a volatility to whole IT space. Not to add insult, to injury, that Trump being elected and his hardline policies on the H-1B visa is also kind of adding insult to the injury. So this is kind of a situation where they have a lot of cash in their balance sheet. Now certainly when one company does go for a share buyback, a TCS, largest in last 15 years of almost 16,000 crore of 3% equity. I believe that this is certainly following. Why? Because most of the IT companies have a huge cash. If you look at the Wipro, 35,000 crore in their balance sheet. They have just done 2,500 crore share buyback in last 1 year. TCS is coming with 16,000 crore, while Infosys has also now moved for somewhat 12,000 crore. So this is excess cash in their balance sheet. Now going into the market, looking for mergers or acquisitions, going on to some mid-cap companies, looking to take them over, is certainly very long, longer period of time requires for it. So what do you do with this current cash in your balance sheet when NESCOM has predicted a single-digit growth in 2017 and coming years, specifically for IT industry, which has seen double-digit growth in last over a decade. So this kind of a thing has certainly pushed all of the IT companies to utilize their cash. This is nothing. This is going to give a kind of a confidence, not just to the management, but to investors as well. Somewhat it will be beneficial for management, where they will increase their stake. Like in TCS, promoters are also participating. So of course they are going to increase their stake and somewhat enjoy the dividends, while the investors will also get that kind of a benefit down the line. So this is in a scenario where there is a single-digit growth. What do you do with the cash? You actually go for a share buyback. You stop the supply or limit the supply and try to improve the P multiple, and certainly will result in improvement of overall share price.
Well, thank you so much, Mr. Sharma, for sharing your thoughts with us and explaining to us what is share buyback, how does it benefit companies, and what should investors do in case there is a share buyback. Well, as you said that in most of the cases, investors should hold on to their shares, but it's up to them what do they want to do with their shares. And with that, it's a wrap up on WION Wallet for this moment. For more news and updates, stay tuned to WION. Thanks for watching us.